Thanks for signing up to this sample series of lessons for the Trades Coach Academy. Welcome you to this first lesson we've got today, and the aim is really just to give you some ideas and a little bit of extra knowledge around how to run a better construction trades business. Some little tips that you'll be able to implement pretty much straight away into your business and hopefully make a positive impact on your bottom line. Also, it's just going to give you a bit of a flavour of what the wider Trades Coach Academy course is all about. And if you like what you hear, then you'll be able to have an opportunity to jump onto the sales page and get onto the course proper. So into the first lesson. So what we're going to talk about today is markup versus margin. One of the fundamental points of confusion that I hear out there in the trade certainly is an issue that I have seen in some of the clients that I've started to deal with until we've managed to get them thinking about different ways to cost their jobs to make more money. And certainly get this right, and it's easy extra profit to make in your business. Unfortunately, if you don't understand the concept or don't implement it, certainly it's a good way of it's a very efficient way of having losing opportunity and making profit as well. So what are we going to cover today? First thing, we're just going to look at perhaps why sometimes that the profit reality, the result that you're getting out of your jobs or that you're reading in your financial reports, just don't seem to line up with kind of where you think that they should do based on where you have been costing your jobs and the way that you have been expecting the results to turn out. So if that's been an issue for you, then we'll look at perhaps a way that you could recalibrate the way that you are doing your costings a little bit in order to make perhaps an adjustment for that markup versus margin confusion that maybe is a cause for that disparity between what you expect as a budget and what you're getting as reality. And if the maths just seems like too much of a hard ask to do, I'll direct you to a downloadable cheat sheet that comes with this lesson, which will list out various markups on one side versus margins on the other. So I'm not too sure if you can relate to the picture of this guy on the page here. You do the work, you do the job, you cost it right, what you think is right, you do a good job, but just what your accountant's telling you you're making in the business or what your financial reports are telling you you're making just doesn't seem to line up with what you expect it to do based on when you did the original cost or costing. And that's a big subject, and to be fair, there are potentially lots of different reasons why profit has perhaps leaked out of your business in between the time that you do the original costing and the time that you bank that final check. And we're not going to cover them all here, and what we do in the main course proper is look at a number of or the range of those reasons why profitability isn't what is expected in your business, and we look at different strategies in place to address those. But today we're just going to look at one, and that is the potential confusion between what you thinking you're getting as a margin and what you perhaps actually are. And probably the best way that we can illustrate this is just run through a simple example. And it is a very simple example. It probably bears little or no resemblance to the reality of the complexity that you have to go through in costing a job, but it just does illustrate the fundamental point that I want to make here. You can scale it up to your particular situation later on. So for our little business here, we have a job with $5,000 worth of direct costs. Direct costs being those that are directly attributable or payable or chargeable, should I say, to the client. So that's typically going to be your materials, your direct labor, any sort of subcontract labor, maybe equipment hire, that sort of stuff like that. Anything that goes against the job. And maybe you've got this kind of profit figure in your mind. Either it's something that you're targeting yourself, or perhaps, after seeing your accountant, he looks at your books and says, well, Bob, you should really be aiming at 20% gross profit in your business in this example. So that's the kind of figure that you got in mind. So what can happen is that when you're calculating the sale price, you take your direct costs, you add on your this profit figure that you have in your mind, and that gives you your sale price. So in our example, we have our $5,000 of direct costs. We added on our 20% profit figure to get our sale price of $6,000. Fantastic. Will that give you that 20% profit figure that your accountant says you need to hit in order to run a successful business? Let's calculate it. So the way that you calculate a gross profit or gross margin in a business, if you're familiar at all with the way that a profit and loss statement kind of looks, and hopefully you are. If you're not, we need to talk, and we'll cover that in the course as well. But you do in the profit and loss statement is you start with the revenue figure, sale price, and you deduct off all the direct costs. That will give you the gross profit or gross margin in dollar terms as to how efficient you are at turning revenue into profit at the pit face, the operational end of your business. That gives you a dollar figure. What's really interesting to know though is what's that as a percentage. And so to calculate that, you divide that gross profit dollar figure back into the revenue or sales figure, and that will give you a percentage. So in our little example here, we have our $6,000 worth of revenue. We deduct off our $5,000 worth of direct costs. Then we divide it again by the sale price of $6,000. So there's $1,000 gross profit dollars divided by 6,000 gives us, 16.67. Where's our 20%? What happened to the 3.3%? Where did that disappear to? As I said, there may well be lots of reasons why it is short, but in this particular instance, the fundamental issue was that the markup that was added to the direct costs does not equal the margin. So that's the most important takeaway figure here. If you're aiming at a gross profit figure, just adding that to your direct costs is not going to earn you that figure when you do the calculation back the way that a profit and loss statement runs. Sounds confusing? Maybe it is a little bit. What are you going to do about it? Well, the best solution really is to run an extra calculation when you're trying to figure out what that sale price needs to be in order to generate you the required gross profit percentage figure. And to do that, what you do is you take your direct costs and you divide that by 1 minus the target profit percentage figure, but expressed as a decimal. What does that mean? Okay, in our example, we have our $5,000 of direct costs. What we do is we divide that by 1 minus 20% expressed as a decimal, which is 0.2. So 1 minus 0.2 is 0.8. So dividing $5,000 divided by 0.8 gives us a revised sale price or a target sale price of $6,250, not $6,000. And you might say, I can't sell the project for $6,250. Too much competition out there. Can't get it. Well, that is a reality in the marketplace. And once we get into the course proper as well, we will cover at one point some of the marketing and sales strategies that will give you perhaps some additional kind of tools and processes in order to be able to achieve a higher sale price in order to get a better, more consistent, higher gross profit percentage in your business. Okay, so just as a double check here, is that 6,250 the right sale price to get us our 20%? If you remember what that formula was, sale price minus direct cost divided by sale price again. So now, example, we have $1,250 worth of gross profit in dollars divided by 6,250 is 20%. My apologies, gone past too fast. 20%. So there we have hit our 20% target figure. Okay, you can do the maths each time as an aside or as a guide when you're doing your costing, or download the cheat sheet. That is, there's a link there on the right hand side for that document, and on that sheet listed on one side is a range of markups which you apply to add on to the direct costs, and on the right hand side is the corresponding gross margin as to what that will generate for you when you calculate it all back in the profit and loss statement process. So hopefully that gives you a bit of understanding as to that process between markup and margin, and will perhaps give you an extra tool or process to go through in order to achieve a higher profit in your business. And that's what I'm about. But take some action. That's the most important thing for these lessons. And probably the best thing to do, yes, you can listen to this lesson again, and I suggest you run through it again, but probably the most beneficial thing you can do is go back to some of your old projects and get the figures out and put them through that recalculation process again, and just so that you can directly apply it to your particular situation. And then perhaps figure out perhaps what you should have sold a project for in order to give you that target gross profit percentage figure. Certainly, also another action is to download the cheat sheet. So do that, download that, keep it by your elbow, and when you're doing projects, then you can do that as a ready reckoner, stick it on your wall, put it in your folder, whatever. But there's a tool there to use, and hopefully that will be of some practical assistance to you. So that's markup versus margin. Next lesson that we'll be going into in a day or two's time, we'll be diving quite a bit deeper into the costing process. And I'm covering two sides of costing here because I think it's a really, really important subject in many trades businesses. One of the fundamental issues that I see is that jobs are not costed properly from the get-go, and at the end of the day, you'll never make the kind of profit that you need in your business if you get it wrong from the first stage of a poor costing, not generating enough profit. It's very hard to make up a poor job done on costing. We're trying to get more money in the field. Generally speaking, it goes the other way. So that's what's coming up. If you want to jump ahead and get an idea of what's the whole course proper is all about, there's a link there on the right hand side that will take you through to the information page. Feel free to do so, and if it's something that you want to jump onto straight away, then you'll be able to go through the shopping cart and put your credit card in and get stuck into the course. If not, I look forward to seeing you in the next lesson in a couple of days. Thanks.